Tax day is nearly here. Last year, almost 18 million taxpayers waited until the final week to submit their tax returns. But procrastinating can lead to costly mistakes. That's why we have joining us live this morning, Drake & Associates' very own Randy Winkler. Good morning to you, Randy. How are you?
Great. Alex, how are you?
Doing well. Like I said, I already got my taxes done, but for a lot of folks out there that have had other stuff going on, what's your best advice? April 15th is right around the corner.
Yes, it is. The best advice is to file electronically. Paper filing tends to be more time consuming and it can lead to more errors. Filing electronically makes it easier to catch mistakes because the computer does the math for you. Also, the IRS really is looking for the tax returns that are written out because those are the ones most likely to be audited. So if you want to look into e-filing, it's faster. There's going to be less concerns about mail time. And there's also several low-cost options to file electronically. If you have an adjusted gross income or AGI of less than $84,000, you can use the free file program through the IRS. Also, you want to make sure to double check your work. It's very easy to miscalculate with an entry or fat finger, get some numbers reversed. If you accidentally underpay your taxes, the IRS will send you a letter demanding payment, which can be a real strain on your budget if you were not expecting that. So if the IRS owes you money, math errors are also going to trigger a manual review, which could delay you getting your refund. It's also very important to check any handwritten entries, including Social Security, bank account numbers, misspellings. These can all cause problems and a delay in your return. So if you're rushing to file before the deadline, you're not going to have a lot of time to find deductions. So maybe next year, think about filing earlier to use some tax strategies like contributing to your retirement accounts to lower your taxable income.
What if someone's in a very particular situation, Randy, and they absolutely cannot make that filing deadline?
Yeah, that happens quite often. So if you can't file by April 15th, you'll need to file an extension, which gives you until October 15th to file. Now, you'll need to file your extension by tax day, April 15th, to avoid penalties. But remember, the extension only counts for the paperwork. Any money that you owe on your taxes is still due on April 15th. So do your best to calculate approximately how much you'll owe the IRS. And if you don't pay on time, you'll be charged a monthly late payment fee, which is 0.5% of what you owe.
And you guys get a lot of questions, right? Especially about taxes, I would assume. What do you think are some of the most common questions you would get? And give us one of those answers for our viewers this morning.
Well, it's good to take a look at what your tax situation is going to look like in the next year. So we always say tax prep is looking backwards, tax planning is looking forward. So is your income going to be up? Is it going to be down? Or is there unemployment? Are there layoffs? Are there changes in there? Those all could be factored into whether you want to maybe fund into a tax deferred account or into a Roth, which is tax free. So taking a look at what your situation is going to look like and trying to anticipate your tax bill for the following year would be very beneficial.
And you also have to keep in mind those big life events, right? Like a couple of years ago, I got married, for example, and then, my whole tax process changed. I wasn't used to that.
That's a big one. So if you're married, now you're filing jointly. If you're single, you're going to be filing as single or head of household. Those are very different numbers. Your brackets expand when you're in the married filing jointly. They contract when you're single. That can have a really big effect. We see a lot in the people we work with, because we work with retirees, a lot of widows and widowers that are going from that married filing joint bracket to the single or household, and it makes a really big change.
And you are a great resource in Drake & Associates as a whole for people out there who are listening right now. And maybe we didn't touch on the question they have, but you guys can answer most questions, correct?
Yeah, we'd love to talk to people. We look through the tax planning looking forward. We work very closely with CPA firms on the tax prep looking backward. And it all works very closely together and can have just a humongous impact on your financial future.
Randy, I appreciate all the advice. I'm sure our viewers do as well. Plan ahead. That's the best note to take away from this. And Randy, thanks for joining us. It was nice to meet you.
Oh, it was my pleasure, Alex. Take care.
Thank you.